for some firms, when you look at their balance sheet in the assets section, there's one number that really stands out, and that's the property, plant, and equipment, which is sometimes abbreviated as PPE or PP&E. And basically what we're talking about with PPE is tangible assets with a long life that basically they're used in the main core business operations. And so this could be land that the factory building is sitting on, the factory itself, tools. It could be resources, it could be equipment, machines, all these things that are used to produce the products in the normal business operations of the firm. So property, plant, and equipment are also, they're recorded when you purchase them, they're recorded at cost. So if you buy, or if it costs $100 to build a building, or excuse me, $100,000 to build a building or to purchase one, it'll be recorded at cost on the balance sheet. But then there's a unique feature of property, plant, and equipment relative to other assets in that we depreciate these assets. And you might be wondering, okay, well, what is depreciation? And I'm not going to go into completely at length here, but the main idea being, so let's say you buy this asset for $100 and you estimate that this asset is going to last a certain amount of time, maybe 5 years. You can pick a way to kind of spread the cost of this asset over those years. You're basically saying that, okay, over time this asset is being used up. It's being used up, it's deteriorating and so forth, and I need to spread the cost over time. And so each year you might take $20 of depreciation out of this original asset cost and say, okay, now the asset's only worth $80 in terms of my balance sheet and so forth. So I have another video on depreciation, but the main idea being that when we have property, plant, and equipment on our balance sheet, it's going to be presented net of depreciation. Net of depreciation. And so let me just give you a quick little example of how that might look. So let's say we had under our non-current assets on the balance sheet, we've got our PP&E section, and then we say, okay, we've got a building, we've got some land that the building sits on, and the reason I say sits on is because remember, the land isn't being used in the operations of the firm. Then it's going to be under the investment section, but this is being used in the operations. It's where we have our factory. So these things, let's say the building's at 100, the land is at 50, the cost, and then the equipment is at 50. But then we say, okay, well, we've got this accumulated depreciation. It's all the depreciation that's built up over time, and this accumulated depreciation is 30. So this 30 is going to be subtracted out, so I'll put it in parentheses just so you can see. And so what we're going to do is just basically add up all our PP&E and then subtract out that accumulated depreciation. So this is 200 minus 30, so it's 170. So although our PP&E is, before we net out the depreciation of 30, before we do that it's 200, our net PPE is going to be 170.